We're scheduled now, but like I get plenty of time. I'm gonna stop at like 10:45 to give the next person time to set up. Like I've done this 3 years ago. Okay. I've done this.
Have you heard them announce you yet?
No.
Okay.
That's why I know that the doors are open a little late, so I'm just gonna give it like 5
Yeah,
minutes.
that's why we go remind you.
Yeah. I'm fine though. Don't worry about me. Like I'll give it.
What time do you think you're to start?
I was figuring it's 10:17 now.
10 minutes.
I'll give it 10 minutes.
10 minutes?
I'll probably speak for like 20 minutes. Take
All right.
questions.
So I'll give it 10, then I'll count to announce.
Okay.
Usually when there's people in here and they announce, people just start coming in. You know.
Right.
I said, you know me, I got to joke with you, man. My little cock.
I'm just gonna give it 5 or 10 minutes. Let people trickle in before I get started.
What time are you supposed to go?
10:15. That's all good. Wes is my. Oh, okay.
Cool.
I'm here to have a weekend and all you get some.
Listen, it pays off, right?
Brought the wife up last night.
See? She's happy, and you to work. Best of both worlds.
Check.
Check, check. Yes, one. Check, check, check.
Okay, they just announced me, so I'll give it a few more minutes and I'll get started. Hey.
Or do you just speak over it? Okay.
Okay. Yeah, maybe that one, just so there's a little less noise. I can send you this after the whole presentation afterwards too. It's just a PowerPoint. All right, it's 10:25. I guess I'll kick this off now. My name's Lee Generous. Thanks to Jenks Production for having me here for the event. This is my third Xpo Canna. I've spoken in Miami. I've spoken in Las Vegas. I've been around the country. I've invested in cannabis companies. I support cannabis companies as a outsourced financial solution, and I work with investors who are invested in cannabis companies. Today, we're just going to go over a couple of outlooks on the market, top concerns for cannabis investors, legal structures and entity structures when creating a cannabis entity, keys to raising capital, why world-class accounting is important in this endeavor, and also a fiduciary solution. So as I kind of indicated, I have three entities that I support cannabis in. Dope CFO Certified Advisors is a tax and accounting solution that we work directly with cannabis companies as an outsourced financial solution, almost like an outsourced CFO. I think that term's been commoditized a little bit, but we have myself and our organization has a handful of companies across the country. Usually work with a limited number of companies, try to be more of an intimate solution. We meet weekly, sometimes multiple times a week, create GAAP-approved financial statements, make sure books in order, books and records are in order. Zion Ventures is a 506c venture fund that we just launched. We're looking to raise $50 million. We've already raised some capital. We're going to have an asset-based lending solution. Generous Wealth Management is a registered investment advisor where we provide comprehensive financial solutions and fiduciary wealth management solutions to individual investors and some cannabis executives as well. So I kind of go pretty free form when I do these presentations. I've got the PowerPoint here. If anyone wants it, just raise your hand. I can email it over to you or send it over to you. Cannabis investing has changed a lot over the years. I think when legalization first happened, there was a lot of easy money that came into the industry and valuations spiked incredibly. I think the market has matured very much so. The IRS has gotten involved. There's been audits. There's a lot of subject matter case that we could actually look at now. I think early investors did much less due diligence than the investors are doing today. Going forward, investors, whether it's cannabis, CBD, whatever the startups are, they're going to want to see, a perpetual data room, right? A source. If they're going to ask for information, they're going to want to see that you're organized, you have a team in place, and that it's easily accessible and that you can turn it around quickly. Investors are going to be concerned and want to be aware that you have your tax situation in order. With 280E, it does provide some challenges. Every state's rules and regulations are unique. Connecticut, I'm based out of Massachusetts. I have clients in Vermont, across New England, New York. Every state has its own rules and regulations, so having your financial house in order is going to be key. So entity structures, I think most common we see like the C Corp, but depending on what your needs are, that'll be fluid and fluctuate. We'll get into that a little bit more later in the slides here. More robust compliance. All right, so what is the best entity structure? Really depends, right? This isn't a clean answer. It depends on what your objectives are, what you're trying to accomplish. Again, this I think why it's important to have a financial professional on your side. If you're just a single individual starting a company, you might have more flexibility. If you're trying to bring in numerous investors, it's going to open up the door to additional risk to the investors and to yourself. So your entity structure can really drive impact to not only the business, but to your investors. We work with some companies that are LLCs, that are partnerships, venture capital funds that are master limited partnerships, C Corps, S Corps. It runs the gamut. Generally, right now, before the new tax code sunsets next year, C Corp flat rate is a flat 21%. So that's pretty attractive. But that's subject to change next year, right? So something to take into effect or take into consideration. It really depends on the ability for both the business and the owners to be able to handle a tax bill, right? If you're a partnership and you get a K-1, you didn't actually receive any funds from the company, but you may have a tax liability. As an investor, you should be aware that you may owe taxes even though you didn't get a distribution, right? So something that as a business owner that you want to be aware of before you get involved in an engagement, especially with an investor. You don't want an unhappy investor in the first couple of years. So this is just some due diligence that we think it's prudent to be going over at the beginning of your endeavor and making sure you're doing this due diligence. I like to do a lot of what if planning. If you went down this path as an LLC, here's how it might look. If you created an S Corp 5 years down the road, here's how it might look 1 year down the road. And that way, when investors come in and they're starting to look to invest in your entity, we can give them an idea of what the impact of the different entity structures are. And depending on where you are in your life cycle, you might still be able to change or modify your entity structure. Just bear with me. I'm tech savvy enough to be dangerous here. So I'm a certified financial planner, enrolled tax agent, chartered financial consultant. I have a lot of designations. I am not an attorney, though. I think whatever entity structure you're setting up, whatever endeavor you're involved in, it is key to have a team of professionals, and those professionals should include an attorney, right? I can't write legal documents. I can't give legal advice. That's why we think it's key to have either a tax attorney or legal counsel on your side to at least advise you and help you in this entity selection. In our experience, when we're working with board of directors, my background, I spent 10 years at Fidelity Investments, 7 years in a private wealth practice before I went out on my own. I had a high net worth client who invested in cannabis. I invested with them. Some of my other clients invested. That's when we kind of started looking under the hood of some of these companies. And I guess for lack of a better way to put it, I found that the financial hygiene for the cannabis companies was not always the best. And it did create challenges for them to raise capital. So in the family office space, when I was dealing with, the Forbes Top 100, I generally found that, Mark Zuckerberg's team, the Johnson family that owns Fidelity, they have a team of professionals that work under them. They have a dedicated attorney, a dedicated investment professional, dedicated insurance professional, a dedicated tax professional, every subject matter that you could think of, and that's their dedicated team. And, that individual will be like, this is what I want to do. And then he puts it off to his team to come back with all the risks, pros and cons of that endeavor, and then report back. I think every business owner, whether it's in cannabis or just any business, needs that team of professionals. In reality, we all have those professionals in our lives. We all have an insurance person who covers our car and our home, or an investment person, or somebody's managing your 401k, somebody's helping you with life insurance. So we all have these teams of professionals. Our view as a firm is to try to create a single source solution. So we have 2 CPAs on staff, myself, some investment advisors, and an admin team. to be a single source solution for the industry, whether it's in cannabis or outside, because we support both the cannabis, CBD, and traditional business owners as well. There's a lot of legal documents depending on what entity structure you are going to select. This is just some examples of a C Corp. If you're involved in a capital raise, some potential legal documents that, again, I would advise having legal counsel help you with. But you could have a term sheet, certificates of incorporation, safe notes, which is a simple application for future equity. It's very common in the private equity space, and especially early startups. Safe notes and safe raises are very common. Preferred stock, I generally don't see that unless it's a larger raise, probably a $20 to $30 million size, where we're going to have multiple investors, maybe multiple share classes. Rights agreements, shareholder consents. Depending on the size of your entity, your board, you want to have board consent agreements, subscription agreements, pretty much everything on here. A lot of this is ongoing. We need to track these at inception. When we're working with companies, we try to close out and make sure the books and records are in order every single month. And then we're delivering KPIs on a quarterly and monthly basis as well. Some of these things, like your cap table, it's going to be maintained and updated over time. You come in day one, the valuation of your company pre-launch is going to be different than the valuation of your company afterwards. So that cap table should be updated over time so that your investors know where they stand. In my experience, sometimes it's easier to outsource, like things like cap table management. There's a lot of companies out there, Carta, who's not my number one, but like companies like that you can outsource that solution to. I am of the opinion to kind of focus on what you're best at. I'm a finance guy. I go to sleep thinking about finance. I wake up thinking about it. When it comes to subject matter that I'm not familiar with, I usually find a professional to outsource that. I don't want to dilute my skill set. And I would say the same to somebody in the cannabis industry. If your skill set is agricultural, growing, retail, whatever it is, focus in on what you're best at and try to outsource the things that you can to delegate. And that's the way to scale, in my opinion. It's a couple quick hits on the different entity types here. I'm going to kind of go through this presentation relatively quickly just because the next group is going to come on, but I'll leave it open like 10 minutes so there's enough of us, a small enough group. We can have an open dialogue if anyone has any questions. LLCs, term sheets, suitability questionnaire for your investors. Depending on your entity structure, you can get into Reg D and involvement with the SEC. So you want to make sure you have your affairs in order. You don't want a surprise audit or a surprise fine, anything like that. So doing your due diligence in the beginning is important. Investor right agreements, again, you'll see safe docs and safe notes. I think that's an easier way to raise capital for an early stage company, in my opinion. As you mature, you might want to get into, the Series A, Series B, Series C. There's different avenues that you can go down. Something that we can work with companies with, and happy to have a conversation with anybody as we go. All right, some of the keys to raising capital. A pre-revenue company, we want to have these essential 5 things in place. You want to have a team, right? Like I said before, if your skill set is as a grower, a cultivator, or a salesperson in a retail, you want to focus on that. You want to have an experienced team that can represent you and your organization in front of the IRS. So you're going to want either a tax attorney, a CPA, or an enrolled tax agent who can speak directly with the IRS and your state, revenue board, whether it's, I work in Massachusetts a lot, and Vermont and New England. I deal with the Mass Department of Revenue frequently. Not something my clients want to be doing. They're not always the most efficient organizations. So it's, again, nice to outsource that ability. A well thought out entity plan, capital structure. Investors are going to want to see that. I know for me, when I'm doing due diligence on a company that I'm looking to invest in, I want to see their entity structure. I want to see a pro forma out at least 5 years, and I want to see best case and worst case scenarios. Generally, whatever you project on a pro forma, The reality is going to be something totally different a year out, but I still want to have an idea how much due diligence you have done and how much stake in the game that you have. A concise and realistic pitch deck. I've gotten pitch decks that are 100 pages long. Not even looking at it. It's too much. Now you get a little bit deeper into the process. Maybe we'll want to do some more due diligence than that. When we help create pitch decks, we generally try to keep them to like 10 to 12 pages. One of my colleagues, Terry Buffalo, he looked at 500 pitch decks last year. They can't all be 50 pages. There's only so much time in the day, right? So a concise, to the point pitch deck. A lot of times what we'll do, another one of my colleagues, David Kunick, who I work with in Zion Ventures, he does a lot of help in capital raising. Like, he always recommends, and I think this is a good point as well, on the final page of your pitch deck, if this is something you're trying to raise to capital, you can always put links to your perpetual data room to additional resources, so that if the investor wants to get additional access, they could just click there and say like, oh, look at this pro forma, or look at this. Like the pitch deck is really just to get your idea out there, see what your addressable market is, and really whet the appetite of the investor, so to say. And then, having a good road show. So what do we mean by road show? If you're trying to raise capital, what is your plan? Are you going to go to your initial family and friends market? And then after that, how are you going to get access to capital? Before this past year, interest rates have risen significantly. The access to capital has gotten significantly more difficult. We were in a low interest rate environment after the financial crisis of 2009. A lot of the entrepreneurs that I work with, I think, underestimated the fact that capital was very easy to get. If you're a high net worth person, you're not going to be sitting in the bank getting 1% or 0%. So people were taking additional risk and deploying their capital to try to get a reasonable return on their assets. Especially during the COVID pandemic, private equity exploded. People were looking, interest rates again, were at all-time lows. The cost to borrow was very low, and the markets were taking off, right? So the private equity markets exploded. I would say after the last 2 years, there's been significant retraction in the deployment of capital. I can now go and sit in a guaranteed investment and get 6%. So like, what's my impetus to take risk to invest in your company? Am I going to make more than 6%? What's my risk, right? So I'm going to be looking at, the equivalent opportunities and the opportunity costs for me or for the investors. This is what they're going to want to look at. Generally, when investors coming in to a private venture like this, they're not looking to make a 6 or 10% return. In the venture capital space, a lot of times, we'll make 10 to 50 investments and only 2 or 3 of them are really hit it out of the park. So, we're looking for, here's my little timer here. We'll kind of wrap this up in 5 minutes. We're looking for an opportunity for either a long-standing cash flow positive business or the opportunity to take a part in something that might change an industry or change a market. I think we all believe, like I do personally, cannabis will be federally legal at some point. I'm of the opinion when that happens, valuations will spike, but they'll probably come back to earth after that. Connecticut's still a newer market. Prices will probably remain elevated for some times. What has generally happened as I've gone across the country, new markets, prices spike, valuations are higher in the beginning. Over time, more distributors, more operations come online, prices tend to fall, and there'll be an evening out of the market. I'm trying to fly through this because I said I'd stop at 5:50. Great team. Entity plan, I think I've kind of hit on that. Again, this is key. Concise, realistic pitch deck. If you're trying to raise capital, be realistic with what you're putting out there. In the early days, we saw pitch decks of people saying they're $50 million, $100 million company, which I kind of giggled at first. But, in the beginning, the markets were taking off, whether it was in Colorado, where we have some operations and some investors, or up in the Northwest. Certainly those early markets took off, but they've evened out big time. Size, realistic. So financial model, you'd want to work with either a CPA or a financial professional to make sure that you have a realistic pro forma put together if you're pre-revenue. If you're post-revenue, we're going to want to see updated and valid financial statements. If I'm working with a company and it's whatever, just this last year, September 2023, we were about to invest. I asked them for their financial statements, and the most recent financial statements are from February. It's now September. That's a huge red flag to me as an investor. Like, how are you tracking your business? How are you making quarterly tax payments? Are you doing the appropriate due diligence? Right there, that's probably a no-go. So in our opinion, you want to have all your data accessible, up to date, and in good order. Roadshow, again, for us, when we take on investors or clients to raise capital, I travel across the country doing events like this. I also sit and pitch shows, pitch decks as an accredited investor. So I have a big network of venture capitalists, other investors, family offices who are interested in private ventures. So we generally go out to our market after we get our clients in good order and kind of bring them on that roadshow, start making introductions depending on the specific needs of the investor. Some want to just be in cultivation, some want a fully vertically integrated operation. It can run the gamut. 280E obviously is the biggest challenge in cannabis. In our opinion, you're not trying to beat 280E, you're trying to manage it appropriately. The entity structure, putting everything into cost of goods sold, in our opinion, is not the answer, and it's actually a red flag for a potential audit. Wittig, almost the IRS is batting somewhere in the neighborhood of 85% in cannabis audits. It's easy money for them. When they audit a cannabis company, they generally win. So we want to make sure that we're managing, our books and records and managing 280E as best we can. What do I got for time here? All right, I got about 5 minutes here. I'm going to kind of plan through. Some things you want to have in order: inventory and cash controls, onboarding systems, engagement letters, making sure you have tools and work papers in place for backup for everything that you're doing, both for investors and for regulators. State mandated seed to sale tracking software. I think that's pretty straightforward. Merchant service solutions, monthly, quarterly, yearly reporting requirements, banking state investors. I have one operation that's sitting on like $120,000 in cash. I'm like, you need a banking solution for your cash. You can't be holding on cash. What's the control for that? We want to see corporate governance in place, controls in place, processes and procedures in place, especially as the business expands. If you're involved in a social equity startup, there are certain parameters that you need to abide by. As an investor, you need to be conscious of this, but also as a business owner. These are just a list of some of the solutions we provide for our wealth management clients. We work with some cannabis owners and executives. We work with investors, and these are just some of the list of concierge services we have. Again, we're trying to replicate a family office type model for our registered investment advisors. We do tax planning, tax preparation, investment management. We've created a 401k platform for the cannabis industry. We've found insurance companies that will work with the cannabis industry, banking connections. So I do believe in the plant. I do believe in the plant as a medicine. I believe that in the future it will be legal. Someday we'll be able to go to the bar and order a cannabis drink. I'm an investor in a cannabis beverage company, an agricultural company, a cultivation company. I have a client who's got 120,000 square foot cultivation. It's about a $30 million build. It's a lot of work. It's about 9 different entities, but we meet with them every single week and we close out their books every month, and we're continuing to, as they expand, we're continuing to support them. These are our different entities, some of our contacts if you want to connect in more depth, or if anyone has questions. We've got about 4 minutes left here. I'm happy to answer them, or if you want to track me down afterwards, I'm happy to have a conversation as well. Thank you to Jenks Production. Thank you for everyone in the audience. And I'm here if you'd have any questions. So the question was, what's the rate on private loans in the cannabis space? For me, as like an investor, when I'm looking at it, like I know I can buy a low-graded, high-yield bond and get 12 to 14% for a regional bank, right? There's been a lot of banking issues. So if I'm going to invest in a federally illegal company, right, like with Zion Ventures, we're telling investors that we think we can get 12 to 20%. So I think you're looking at anywhere from a 1 to 2% per month rate to get capital. But it really depends. Like, what are you going to give with that capital? Are you going to give me warrants to buy future equity exposure in your company? Maybe I'll give you a reduced rate. Do you have an asset that I can collateralize to lend you money on for that business? So there's a lot of variables in there, but I would say anywhere from 1 to 2% a month right now is the going rate. I've seen some people get 10%, but there's other strings attached to that. So again, if you just go online, look up a low grade, high yield bond. That's how I think of the cannabis market. It's a federally illegal market. It's not going to be rated AAA, right? Until that happens. And then, it depends on your company, right? You'll be looking at your books and records. Are you going to give me a personal guarantee? Like anytime I look at a company and I'm investing, I always want to know, what does the operator have? Do you have skin in the game? How much of your capital is in this? When I have people come to me looking for capital and they've put nothing into it, like they're creating a C Corp, they've removed all their legal exposure, they have no assets in the game. It's like, well, if you don't have any skin in the game, how am I going to have skin in the game? I can tell you for Zion Ventures, that's one of our first due diligence questions. How much skin in the game do you have?
So you mentioned the ROI is even 12%, right? Is that what you're
When you said ROI, he was asking how much it costs to like get capital to like a loan. Yeah. I'm really looking at like in an early stage company is like cash flow management. I don't expect to make, if I'm investing equity exposure, and I would tell this to my clients, I don't expect a return for 10 years. Like, to be realistic, like to sit here and think that I'm going to give you capital and then turn it around in a year. I don't think that's fair to you as a business owner or to me as an investor. And I would say that the same to my wealth management clients. We shouldn't be buying Amazon stock if you're trying to buy a house next year, right? This is a long-term investment. Whereas like a debt play where you're asking about, like Zion Ventures is being created for short-term, under 2 years borrowing needs. And we're going to look to collateralize something. But as an investor, there's a lot of things, if we're going to invest equity exposure, that we're looking at, like what problem are you solving? What unique niche do you have? Are you going to be able to maybe lock down a market that somebody isn't going to be able to because of your licensing ability, your ability to get a license or your real estate? Like there's a lot of other factors in that. So I never look at an investment and say like, oh, I need to make 7% on that. I think every investment is kind of unique and it depends. Like as I get into it, I would then say like, all right, based on what I've seen here, these are my expectations. And when we invest, we're kind of more hands-on. Like we're going to meet with our companies and be like, hey, you see you're doing this really well, but we have another company that's doing this. You might want to consider taking on this best practice or whatever it might be. Did that answer your question? All right. Anyone else?